why I'm extraordinarily bullish long term. Short term, it's super volatile. It could go down 20% in the next few weeks. We don't know. It could go up 20%. We don't know. But over the long period of time, I'm extremely confident that it's going to be higher over the course of the next 5 to 10 years. As far as my price prediction, I said $180,000 last year. I think I made that prediction. So I hate price predictions, but it's still, in my mind, it's still in play, and that would be somewhere around October, November in my mind. Whether that happens this year or not, I don't know. We'll see what happens with the general market, whether we have a steep drawdown and a quick recovery, or if we have a grind sideways because of the economy. It all depends on where this liquidity goes and how the Fed acts, and the kind of impacts that tariffs or possible economic downturn could have on the overall markets.
James Lavish opens with a candid overview of the current macroeconomic risks. He acknowledges the ever-present threat of tariffs, tightening credit, and the potential for a slow economic downturn. These are not just abstract risks. They are very real factors that could weigh heavily on financial markets. However, Lavish emphasizes that on the flip side, there's a powerful counterforce at play: monetary expansion, with central banks likely to maintain or even expand liquidity heading into the end of the year and into the next. Risk assets like Bitcoin and gold stand to benefit.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
You do have risks to the economy and the market we've talked about. With the tariffs and possible grinding lower into an economic downturn. It's all possible. But we also have, on the flip side of that, we've got the likely expansion of the money supply and liquidity through the end of this year and into next year. And that's a driver to risk assets and gold and Bitcoin. And so I do see that, barring any credit event, I do see that being the main driver for price here. But also, on top of that, you've got all of these positive tailwinds that are driving the adoption of Bitcoin. And those tailwinds are the ETFs we talked about, the options on the ETFs, which enable institutions to hold more underlying and use options to manage risk around it. Important, especially for hedge funds. And then you've got the FASB rule, the accounting change that we didn't talk about yet, which is, for your listeners very quickly, FASB changed a rule where they used to be that if you own Bitcoin as a company on your balance sheet, you had to mark it at the lower of the cost or the lowest it's ever been and hold it as an impaired asset on your balance sheet. But that was changed this last year. And so now it's mark to market. So wherever you buy it, you can market to market that day, and wherever it's trading in the market. So that's a really big, that's a big deal too. The SAB 121 we talked about is a big deal. And of course, you've got the Bitcoin strategic reserve that was signed in as an executive order by Trump. And so, but President Trump signed that into he signed into legislation through executive order. However, it was disappointing to many of the investors who were expecting that executive order to come with a plan to buy more Bitcoin. Well, there's no plan to buy anymore because it has to be budget neutral. So basically that executive order said, yeah, we're going to start the strategic reserve. Number one, that means that we're not going to sell any more Bitcoin than we already have. And so we think about 200,000 Bitcoin on the U.S. government balance sheet somewhere, and they sold about half of that. There was 400, and over the last 10 years, they've sold about 200,000 Bitcoin that they had seized through illicit or illegal activities, and so, but we still have 200. And we're supposed to hold that through this executive order. But we could add to it We could add to that Bitcoin reserve as long as it's budget neutral, meaning it does not require us to borrow any more money or take away from, it doesn't increase the budget. So how could we do that? Well, one of the obvious things would be to sell the other cryptocurrencies that have been seized through illicit or illegal activities, which would be now included in that in the cryptocurrency account, which is called the
stockpile. Is that the stockpile?
The stockpile, strategic stockpile.
Yeah.
So that would be obvious to sell those because there's no function to add to those except through seizure, and even budget neutral, they can't add to those. So that would be obvious. The other thing would be maybe to sell some gold to buy Bitcoin. But now you flash forward to the Bitcoin Act, which is the act that Senator Lummis had brought to had written. She authored this, and it's the idea that the U.S. government would buy 200,000 Bitcoin a year for 5 years to buy a total of 1 million Bitcoin. And how they do that, well, that would be determined through legislation. This has to go to the floor. It has to go through policy, but what's important about this is that you have the strategic reserve, and now you have this bill. Prior to 8 weeks ago, Senator Lummis had no co-signers. Now she's got a number of co-signers, and the bill is going to find its way to the floor eventually. It's got to go through committees, periods. It's got to be revised. It's going to be changed, and they're going to have to come up with ways that and rules around how they can acquire this Bitcoin or whatever. But that is another tailwind that's coming down the pipe. So all of these things, including likely some large companies throughout this year adding Bitcoin to their balance sheet, S&P 500 type companies that will add Bitcoin to their balance sheet in their treasury. And so when you see that all these things happen, this drives adoption on top of everything we're talking about. So that's why I'm extraordinarily bullish long-term. Short-term, it's super volatile. It could go down 20% in the next few weeks. We don't know. It could go up 20%. We don't know. But over the long period of time, I'm extremely confident that it's going to be higher over the course of the next 5 to 10 years. And so that's why we remain invested in the Bitcoin Opportunity Fund, and we remain exposed. We manage volatility around it. We manage volatility around the general market exposure. And we use systemic risk measures, but by and large, we're really, really excited about the future with Bitcoin. As far as my price prediction, I said $180,000 last year. I think I made that prediction. So I hate price predictions, but it's still, in my mind, it's still in play, and that would be somewhere around October, November in my mind. Whether that happens this year or not, I don't know. We'll see what happens with the general market, whether we have a steep drawdown and a quick recovery, or if we have a grind sideways because of the economy. It all depends on where this liquidity goes and how the Fed acts, and the kind of impacts that tariffs or possible economic downturn could have on the overall markets.
Lavish also touches on an underappreciated phenomenon: Bitcoin proxies in regions where direct Bitcoin ownership is constrained. He cites companies like Metaplanet in Japan, which offer investors a vehicle to gain Bitcoin exposure via the stock market. Similar models are emerging in Brazil, India, and other countries with regulatory barriers. These proxies serve an important purpose in expanding global access to Bitcoin exposure.
Why am I so bullish? Well, because of all of those tailwinds that I just explained to you. Because this is an asset that's being adopted, and what I'm super bullish about in the future, Brahm, is not just it becoming an allocation to regular risk portfolios, but for it to then start eating into bond portfolios and real estate portfolios. That's what I'm super bullish for. And that's when you go from $1 million per coin to $10 million per coin. And that's over the long period of time. But it's not going to happen overnight. It's going to take time. But as this network continues to strengthen, I've said it before, that Bitcoin it's a fortress of digital power. It's nation state resistant, and that's because it is operating on a network that consumes 180 terawatt hours of energy a year. 180,000, terawatt hours a year. And that is the equivalent of over 20 full-scale nuclear reactors running 24/7. And so that is nation-state level resistant, and it makes me sleep well at night. Let's put it that way. The companies who are adding Bitcoin to their balance sheet in order to solve a geographical issue. And what I mean by that is that you can't there's no Bitcoin ETFs in Japan. So Metaplanet is solving that it's a Bitcoin proxy for the Japanese investors, where they can buy it for their personal or retirement accounts. And we're seeing the same thing. We've got a deal that's happening in Brazil. We've got a deal that's likely happening in India, and the same sort of issues where you have geographical barriers to owning Bitcoin as in your investment account or in your retirement account, that you just don't have the capability to do. So you do have Bitcoin proxies for that, and those are the ones that we're talking about there. So there's a purpose for these, and there's a need for them in a number of different ways. How many? I don't know. Is it a bubble? No, not yet. If we see every single company just adding Bitcoin to their balance sheet and suddenly having, a 3, 4, 5, 6x ratio to the Bitcoin underlying on their balance sheet without any underlying business to attach that multiple to, then yes, then it's a bubble. But we're not seeing that yet. And I'm not quite worried about it yet. Do you get frothy right out of the gates? Some of these get pretty frothy right out of the gates, and that's excitement around it and possibly some short covering. But by and large, we like a lot of what we see.
Despite his strong conviction, Lavish remains realistic about short-term volatility. Bitcoin could swing 20% up or down in a matter of weeks. He reiterates that his $180,000 price target, first mentioned last year, is still on the table for late 2025, though market conditions will ultimately dictate the outcome. The Bitcoin Opportunity Fund remains fully exposed to Bitcoin, with strategic volatility management tools in place. Lavish and his team use systemic risk metrics and hedging strategies, but remain extraordinarily bullish over a 5 to 10 year horizon. Please like and subscribe.